The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Good afternoon, boys and girls. It's pretty hard to be interested in futures when stocks go higher and higher and higher. But that's what's happening today. Looks like we're going to be making all-time highs in just about everything today. I'm going to cover just a few little things, but this is one of the few times in my career where I've gotten some inside information, folks. I'm going to post a chart here that I received today from Sister Mary Evangeline. She's in charge of the portfolio for Our Lady of Perpetual Help, which is a ministry for widows and orphans. It's known as the Widows and Orphans Fund. And they have given me some inside information today because they have, as one of their benefactors, Mr. Carl Icahn. And Mr. Icahn is telling everybody that Apple is going to be worth $1 trillion. And the price of that will be right around $216 a share, as I understand. So what we're going to do is we're going to take a look at that today because Sister Mary Evangeline said we are completing some major patterns up here on the long-term weekly chart. Now, if you believe in pattern recognition, back in 2013 in April, we were completing a big ABCD pattern. Nobody wanted Apple stock at that time, but everybody wants it now. So I don't know if Sister Mary Evangeline's going to be correct or not, but what she's doing is she's selling Apple calls at when Apple hits 127, which it already has. She's selling the Apple calls and risking $5. They'll probably come out tomorrow, being a Friday, and give a upgrade on the stock to 216, given Mr. Icahn's prowess in the markets. I actually have met Mr. Icahn, the fellow that ran TWA for him, Frank Pulcrano. Frank's son, Rick, is a very good friend of mine, one of my students from, 25 years ago. An active Forex trader, and they were good friends. And one day, visiting with Frank down in Marco Island, Florida, Carl Icahn walked in the house and visited with us for a little bit because he and Frank were good friends. He's a very pleasant fellow, and so it was very interesting. But anyway, he has probably an ulterior motive of recommending Apple to go to 216, considering he's a very large shareholder in Apple. What I would think is if he really wanted to go to 216, he would come out and say Apple is tremendously overpriced here, and maybe people would sell it and he could buy it at a cheaper price. But that's not what happened. So that's what we're faced with. This pattern has this is a weekly chart, folks, going back 3 years. We have a 1.27 expansion at 127. We have the weekly ABCD pattern at 127. And we have the CD extension of 127 coming in at 127. So this is going to be a very interesting picture here in the in Apple for the next time that we take a look at it. So that's all I wanted to cover about the market for Apple today. I always like to hear the news of what people are really following, so it really makes it interesting to see what's going on. We need to take a look here at our Treasury bond market because we have a oh dear, don't tell me we've lost it. Yep, it looks like we did. Give me a second here. Oh dear, Larry. Well, I'm not able to do it, so just give me one more second. For some reason, my computer is very slow. I don't know if it's because of the internet connection today or whatever it happens to be, but it is a very slow connection, so I'm going to have to talk a little bit till it pops up, and it's still not popping up. Boy, I've got a major problem here, boys and girls. I don't think I'm going to be able to post any charts. That might be a good thing. I do want to get to this is one we can post because we're getting close the big market that we like here at TFNN, and that's the gold market. We are really very, very close. We've already come very, very close to the 786 retracement here in the gold. It's actually traded down to 1216 yesterday. Remember, we did some time counts last week, looking for 20 days down from the high to the low. That comes in either today, tomorrow, or Monday, which is the holiday. So it'll be sometime in this area where you want to be looking to, to go long gold. Now, we had a $17 rally last night. We went from 12.16 all the way up to 12.33. And those of you that have read any of my earlier books that was helped by Jim Twentyman and Dr. Ruth Miller, the harmonic number in gold is 17 and 34, and that's what that first rally was. So we're getting really close here in the gold market. One more push down would be ideal. Would like to see gold possibly get just a little under 1200, and in fact that it's jumping around so much, gives you a really good probability that that could actually be the case. Now, if we take a look at the price of silver here, we'll be able to see that we're looking at the same type of scenario where silver should come down. Right now we're trading around the 1660 areas, I believe. If we could get silver down around the 1580 level, down about another 60, 80 cents, with some type of news that comes out. Now, believe me, this weekend coming up, we've got President's Weekend, but we've got some really big things happening between now and Monday or Tuesday. The first, of course, is the possibility of peace in the Ukraine, and if anybody believes anything that Putin's going to do is that's up to you whether you want to believe that or not, but that's probably a strategic move, but who knows. The other thing is the Greek problem with the debt, whether they're going to accept the Greek bonds in collateral or whatever those things are, what the people are doing is really not important, I guess, from a perspective of fundamentals, but the market is certainly going to act on whatever that happens to be. So we want to watch gold and silver very, very closely here the next few days, because I think they've got a chance to really do something spectacular. That's my guess. I really think it has a chance to do something really good. So we'll see, but it should be coming next week. There'll be some big, what do you call, big, powerful things, to look at. Now, I've had a question. Someone had asked about, emailed me about Baidu. I know it's a commodity show, but we need to talk about Baidu for just a second here, because we had some price objectives just under $200 a share, and of course Baidu had very bad earnings, and it opened all the way down to the 195 level, so it's been under a great deal of pressure here, but this is completing some big patterns down in this area. We've already taken out the lows from what we had last October. But that's all you can say about it. You had some really bad news, and it is going lower. We had the same thing happen with Tesla. Tesla's news was bad, and it also came back a little bit to make the market look like it was going to do the same thing. Now, I wanted to show you one other chart about stocks, because we are right in the wheelhouse of a major ABCD pattern here in the stock market, not only in the S&P but also in the NASDAQ. And if we took a look at the NASDAQ here, we have an ABCD that measures to 43.31. So far, the high of the day has been 43.32, which is pretty close. So we'll see if this is going to be the case here. But this is a hourly chart, going back just about a month, and you can see this pattern is certainly complete, and it is as symmetrical as you could possibly ask for. We'll know later how that's going to react. We've got all these news announcements that are coming out, probably from the Ukraine and from Greece, whether that'll have a big effect. Plus, we have FOMC meeting stuff that is also going to be coming out. So big news is coming. We got the holiday Monday, going to give everybody the day off. So enjoy your President's Day holiday. And one of my favorite presidents, of course, is Thomas Jefferson, and I really enjoyed the some of his history going to Philadelphia. The children live on a street that's only has the front street, and it's only about 10 feet wide, and 4 feet of that is sidewalk. So it's just enough for just a small buggy and a horse. And I'm sure that he walked those streets at one time. So it's really, really cool to be in that area. But Jefferson was probably our smartest president of all. John F. Kennedy, one of his favorite quotes that he's attributed to is he was giving a luncheon in the White House, and he said, "Seldom has there been this much brain power in the White House. The only time that it's been more is when Thomas Jefferson dined alone," which meant that he was smarter than everybody else in the room. But who knows? We'll see what happened. He was a pretty smart dude. He was the one that evidently was the fellow who did the Bill of Rights and all the other things that belong to our country and things of that nature. So we'll see what's going on with that. Now, I wanted to get into the commodities now because we have a situation here with heating oil where we've had a pretty good move here. Just showed the heating oil up. We got a caller in today. Hey, this is good. Got a caller from our friend Brent in California. How are you, Brent?
Doing just wonderful. Larry, how are you today?
I'm hanging in there, buddy. What can I do for you?
I just wanted to quickly say I really enjoyed the interview with Byron yesterday.
Oh, yeah. Thank you.
You guys had some great stories to tell.
Oh, I wish we could tell all of them. He actually came by this morning to visit us, and we up in Scottsdale right now visiting Mark Douglas, and Byron came by, and we were laughing about some of the stories we'd like to tell, and I'd have to clear those with Tom O'Brien, but I'm afraid he's not going to clear them. Okay, what can I help you with, my friend?
Oh, I just quick. I was going to say that when you guys were talking, it was kind of a unique time and place that you guys were in. Really, it
was historical.
You probably couldn't duplicate it even if you wanted to. Now things have changed so much with the exchanges, and it's great that you guys were able to experience that. I was calling about copper. It looked to me like it might have put in kind of a double bottom at that 241. And I was looking.
It certainly looks like it because we've had such a strong move coming off here these last couple of days. So that's what it does look like to me. But, copper has been so bearish for 3 years that it's due for a pretty good rally just to correct the oversold situation.
Yeah, I was just looking at maybe up in the 270 range up there if it could do that potentially.
Yes, that would be the area that I would be watching. That would be about almost a 30-cent rally in copper, which would be about 15%. So that would be usually that's about all you get in a bear market. So that's something that I would be watching pretty closely.
Okay, very good. Well, enjoy California, and just I'll talk to you soon. You take care.
Okay, thanks for calling, Brent. We really appreciate you calling in.
All right, I'll talk to you soon.
Okay.
All right, bye.
All right, folks, we're going to get back to the crude oil because we've had a pretty good run in crude, about 15% here. Well, it's a little more, about 22% run, about $11 a barrel in crude. But the thing that's important here is if you look and see what's happened to heating oil, when crude backed off 15%, oil didn't move.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and we want to get to one other commodity that we've been following for quite a bit, which is the oil market. And I just wanted to bring up a chart that we had that's a little bit behind the times, but I can't do anything about that because I can't get the data to pop up. But we went up to 53, and then we pulled back down to test the 61% retracement again at 47 and change, and now we've started to move back up again. The chart that I posted previously, which is the heating oil, shows that we only made a 382 retracement off of our lows that we made back in late January. So this is a sign that, you know, we're looking for a potential for this move to go a little bit higher. Even though we're still in a vicious bear market, you know, we could go another 15 or 20% without any trouble at all. So that's the main thing that you want to look at. We got a caller in. We got a caller from Mike in Tampa. Are you there, Mike?
Yes. How are you doing this beautiful day?
Thank you, my friend. How are you?
Great. I just had three: platinum, palladium, and is there a commodity for lithium?
Well, I'm on lithium, but no, I'm not really.
No, not the other one, the one using your batteries.
Yeah, I don't think, though the lithium is also a psychotherapeutic drug they use in, no, but I don't know anything about lithium. I know very little about palladium, and I know a little bit about platinum because of the jewelry part of it, but I really don't know. All I know is platinum held that long-term, you know, bottom down there at 11 and change. As long as we can stay above that, I think we've got a chance. The real key here is, I watch gold and silver, Mike, and to me, I think we're really coming into a really good buying opportunity for gold and silver here in these next few days. And I think it could really be spectacular on the upside. And that's more of a feeling than anything else, just at looking at the charts. I look at that long-term weekly chart in gold and also the long-term weekly chart in platinum, and they look pretty good. I mean, they look very, very good on a long-term basis. They didn't break nearly as much as they could have. They had a 37% correction from the high, which was similar to what we had in 2008. So we got a chance here in gold and silver.
Okay. Thank you very much.
I wish I could help you with lithium. Lithium is not traded. I'm almost sure of that. Right. And palladium is traded, but it's very, very sparse. I mean, the volume of contracts, I happen to know that. It's very, very, and it's mostly for industrial hedgers that they're even doing it. There's no spec business in there at all.
Okay. Okay, thank you again.
My pleasure, and you sure live in a beautiful part of Florida. I really like it down there.
Yes, sir.
Thank you.
Right. Bye-bye.
And have a wonderful holiday for President's Day, of course. Anyway, we'll be talking here a little bit more about crude oil. I think we've got a real chance here in crude to, get a little bit above 58. If we get above 58, that would be about a 35% move off the bottom. That would be about what you're supposed to get in the oil market. So we'll see if that is actually going to, be the case or not. We won't know for sure. We have to wait and see, because that's what you have to do, is have a little patience. That's the main thing that you want to be watching. The market is stock market. Someone asked a question about the new highs to new lows. I think Steve Rhodes did a fabulous job of talking about that on his show. Also, Basil Chapman talked about it too. I mean, we're not seeing spectacular moves in this. I was interested to listen to what Basil said, that he didn't think the market was going to run away from here, even at 18,100. He said he had a hard time being super bullish at that point. It's very difficult to be bearish, but it's hard to be super bullish or bearish at that time, or super bullish, giving those numbers that we're watching so closely. That's the key to some of these things that we're watching. We talked about margin debt before. All those things are still there. The long-term patterns are still there, but the market just does not want to turn over. It could be the fact that maybe QE2 is going to be QE22 might come into effect. But frankly, folks, down the road, when they start to tally this all up, I think when the good ship Lollipop finally docks, people are going to look over the side of the boat and say, uh-oh, how do we get out of this mess? Because if this was a good thing, why didn't they do quantitative easing during the recession of 1974, the recession during 1980, during the early 90s, when we were going to Desert Storm and stuff like that? It's experimental. I don't think it'll work, but everybody's wanting to buy it. The people that benefit the most, of course, are the wealthy, and that's the big 1%. So the key is, folks, to get into that 1% and stay there. That's the whole key. And we'll have to assume that most of you folks here at TFNN are already in that 1%, which we all like to hear. So that's the main thing. One of our listeners has asked the question about when Mark's book will be ready. Spoke with him just a few minutes ago, and it looks like it's going to be in about another month or two. So we're going to take a little break here. Stocks are near new all-time highs. Gold is up a little bit on the day, and Treasury bonds have reversed a little bit, and the currencies are fluctuating as they always do.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we've had a request to talk about the grain markets, which I wanted to do. Fortunately, I was able to get a chart up for November soybeans. That's new crop soybeans. Those are the ones that will start to be planted here about the 1st of May. As you can see, we've completed a very large ABCD pattern down here just a few days ago. I believe our friend Mr. Z from Philadelphia was recommending to everybody in the Tiger Den to be a buyer of these beans down around the 952 level, as I recall, or up about 10 cents from that level right now, which is certainly a good start. But the key to this chart, I believe, from a technical basis, is if you'll notice the ABCD pattern that we mentioned before, it's almost at a perfect double bottom, which matches what we did back in September. But if you'll see the cycle that is there, there's a very interesting cycle that is there. It's a 32-day cycle. From low to low. These are what we call, these are nominal or static cycles. These were cycles that were identified by Jim Hurst in his book, The Profit Magic of Stock Transaction Timing, which was published in 1972. Fortunately, I had Jim Hurst as a customer of mine when I was at Drexel Burnham. He was living up in Grass Valley, Nevada City area of the Sierra Nevada mountains in Nevada. He retired from being an engineer and was fishing. He didn't do very much trading, but when he did, he was pretty much spot on. He only traded stocks, but he talked about cycles in that book, and it was very interesting because later on, some of the cycle things that he talked about were disproved, and part of it is the fact that these cycles are so dynamic. They're not static. They're very dynamic. They expand and contract by these ratios of sacred science, of which the Fibonacci summation sequence is part of, and that's what you're looking for. They expand by 127, 1618, 2.618 pi, etc. So they're always moving back and forth, and that's why time is so very elusive. But when you see it happen once, you have a tendency to see it happen again, and 32 happens to be the nominal cycle for stocks that he pointed out in his book. This happened to be working for soybeans at this particular time. This gives us a price objective in beans just about 60, 70 cents higher than where we are now, which is a little over $3,000. So of a risk of around $500, you've got a chance for a profit of $3,000 if you have the patience, to stay with it. But right now that bottom is held. We've had a pretty good move off the bottom. Nothing spectacular yet, but it still has the chance of doing it. We still have, gold and silver, which all these commodities are interrelated because these commodity funds, when they all go down, they have the same problem that everybody else does. They have to liquidate. So if they want to be long beans and they happen to be long gold and silver, they have to liquidate gold and silver because of, margin requirements that they might have, and that reduces the buying pressure that you have in some of these things. So that's why when commodities move, they have a tendency to move in tandem. And believe me, commodities have been going down for a long time. This is the whole deflation thing that the Fed is actually, very worried about, but in fact, it has not happened as yet. So the beans look like they've had a pretty good turn in here. They haven't moved a lot, but at least they've started. That's the whole key. Now we're going to take a look here at the wheat market also, because we've completed a very large ABCD pattern. We completed it about 23 cents ago, and we've had a pretty good rally coming off of that. But here again, we were a market that has been incredibly bearish, especially since December. The market has been breaking, went from 675. That's when Premier Putin said that they were not going to export any wheat exports from the area of the Black Sea because of the economic sanctions. Wheat immediately rallied 37 cents, and the next day it was down 40 cents. It left that pattern known as a shooting star candle, as you can see back on December the 18th. 2 days after Sarah's birthday, and you will see that when you see those a bearish shooting star like that, that is one of the most bearish candles you can have. The opposite of that, of course, is the hammer. In other words, the prices are down quite a bit, and then they rally quite a bit. We had that hammer in silver when it hit $14.10 an ounce back in late November. So those are candlestick patterns that I think folks should really, pay pretty good attention to. Now, the next grain that we want to look at is another one that we all use, and that is the corn. And we'll put that up and we'll take a look at that, because we've had a pretty good rally here in corn, considering we've had more corn than we'll know what to do with for sure. But corn was only able to back off to the 50% level, whereas beans and wheat had really come down, a lot more. So the commodity that we have the most of, and it's our biggest crop in the United States, which is corn, didn't come down very much at all. And considering we have so much of it available, it's really, really scary to see that this is, what's going on. So got to pay attention to the corn market here. It might give us a chance to get a low-risk buy with a really good pattern. So we want to keep in mind, what that is going about. Now, I have another question. Someone asked a question, Danny in Atlanta asked a question, what is the minimum required for an ABCD pattern? And the minimum is a 382. 38.2%. That's the reciprocal of 0.618. So we want to be able to look for that, a minimum of 382. The problem with the 382 is you really need to have an ABCD present at that time. So if you have an ABCD present at the 382, it would really make a really good spot to take a look at, to be a buyer. We had that in the heating oil that I posted earlier in the show. We had a beautiful 382 retracement in heating oil when crude oil was going down to the 618. Gasoline and also the heating oil would not even back off at all. So those are the ones that you want to keep in mind to see what's happening with it. So keep that's really the only answer that you have. The other thing that you can do, Danny, is you can look for, if you're trading a shorter term thing like a currency or something like that, or even in the greens, look for your BC leg to be a minimum of $300 to $400, because beyond that, it's not a trading opportunity, because you can't sit there in front of well, you can, but it's suicide, I think, is to sit there in front of the monitor, and look at it, all day long. Just I've been doing this for such a long time. Back when we started doing this, I had the ticker tapes. I had ticker tapes from the Board of Trade and the Merck, and they would, the ticker tape would go into a big basket, and you had to replace the ink and everything, and that's how we traded back in the late 60s, early 70s. We didn't get the computer stuff until 83. And so you couldn't really do intraday charts unless you really were adept at, keeping just one or two things. And you could do a 15-minute chart of highs and lows where things were. So it was a big difference then and now. So with that, I'm saying is that if you look at that computer all day long, you're not doing yourself any favors. And I'll tell you why. Because if you're long, you focus on prices going up. And the reason why is our bodies are built to refuse pain. And if you're long and prices are going down, that's pain. And you see the prices going down, it's goodbye house, goodbye car, goodbye boat, goodbye wife. And that's not what you want to have to see happen. So put your order in, put your profit objective in, and you can use alerts to tell you that a certain level's been hit, and you can go back and look at the monitors. I train myself. My monitors turn off at 15 minutes, and I try to come back within a half an hour just to see where things are. But I do have limits in there so that when price levels are hit, like the S&P making a new high or gold making a new low or new high, I want to know what that's happening. Or if I'm getting near an order or get stopped out, I want to hear, the alert go off to tell me what the position is so I can check where we are. But other than that, looking at that all day long is futile. Because believe it or not, folks, no one's out there watching what you're thinking. Believe me, no one really cares whether you're watching or not. So it's futile to waste time doing that. It's better to do some good research and to be able to see where you stand with some of these things. So that's just basically the bottom line of watching these things, as near as I can tell. Whether that's correct or not, I don't know, but I've been doing this for an awful long time. That is, and it's been serving me relatively well. So who knows? We'll just have to wait and see. But we are watching certain things, and that's what's really important to me. The bonds have been really good to us this week. Last week, they topped at that 3-drive pattern, and they broke 5 points, which has been really very good. But the key here now, and we've been short gold. Haven't traded silver in a bit, but the gold is we're looking for one more jab down in the gold, and that's where we'd like to reverse our position and get in and hopefully it's a terrible trading word, but to buy this stuff at a much cheaper price, hopefully around $1,200 an ounce, down about $22 or $20 from where we're trading right now. Silver down about $1 from where we are right now. And with these markets, the way they are, and given the fact that you've got the Greek referendum or whatever it's going to happen to be, plus the Ukrainian thing, and there's probably two or three other things in there that the press is, bantering about to get more advertising. So there'll be some good volatility in time. Plus, we're closed on Monday, which is also, a fun time to see what's going, because the rest of the world is not closed. And they do a lot of trading in the rest of the world, too. So that's important also. So keep in mind that we got this holiday coming up, and it should be, pretty big. I wanted to get away from, just give me one other thing here. I wanted to mention one other, there is it, I don't quite have it yet. I don't know where it is. I'll get it up hopefully by the next break. I'll be able to pull it up and we'll be able to take a look at it. We had a request to take a look at the live cattle market because we've had some huge swings. The reason why I have not been able to have our good friend and contributor here at TFNN, Rich Anderson, on the phone visiting with us is because Rich has been traveling and he's not been able to get to a what do you call it? A landline so we can do this show. But we do want to talk a little bit about the cattle market here because it's just an absolute perfect market as far as Fibonacci relationships and things that we look at. We had that 3 drive to a top pattern. The last time Rich was on was right before Thanksgiving. Once the market went below 169, what Rich was saying, it was going to have a huge break, and of course it broke from 169 all the way down to the ABCD pattern at 148. And if you'll notice that C leg was 61% of the A leg. That's the easy kind, is when they come in exactly at those Fibonacci relationships. What we have going on right now is we have this same situation occurring in live cattle as we speak today. It made a 61% retracement right up at the 159 level. It was a beautiful ABCD pattern occurring at the same time. And so all of those things are telling us that we should be, pretty close to having another leg down, in the cattle market. That's the way it looks like from a technical basis. Remember, H.M. Gartley in his book, Profits in the Stock Market, said, all you have to do is wait for the ABCD correction in a bear market or the ABCD correction in the bull market and make your play when that completes. And that's what we're trying to do here, is to see if this is going to happen. So you've got 3 lower highs now in cattle. You had 1 in November, 1 in December, and now 1 in February. That completes the 135 pattern that was popularized by Roy Longstreet. And each of them are perfect 61% retracements. If you were to draw a channel on this, you'll see that the price channel, let's just do that for everybody. The price channel is just absolutely, just about spot on to what it's supposed to be doing here. So we'll keep an eye here if we can get this done correctly, which I know we can. You'll be able to see that this is a very nice price channel that, well, I should draw it even better. I'll put this one in. This is good enough. I'm afraid I'm going to have technical problems if I get too cute with these tools that I'm trying to draw with. So this is what we're looking at here in cattle. We've been rallying now for about 3 weeks, which is about all you get. The last time we rallied back in December, we rallied for 2 weeks. This one is 3 weeks. So it took 3 weeks to do the same amount of price that we did in 2 weeks back in December. So that's the key to watching the cattle. Hogs are still under a great deal of pressure. They've rallied a little bit, but they're far, far under the price of cattle, which is good because we still are able to eat something besides just tofu and some of the other things than just regular carbohydrates. Someone asked me to review crude oil. Folks, I really believe crude oil's got a chance to rally some more. I know we've went from 43 to 54, back to 47. We're trading around 51 right now. I still think we got higher to go. The reason why I say that is because gasoline is much stronger. It's rallied 40 cents a gallon in just 2 weeks in gasoline, folks. And also we've got heating oil has moved 25 cents a gallon in just a couple of weeks. So those are very positive things. So that's why I think it's important. So we've got to take a little break here to pay a few bills. Stocks are strong. Gold is just about
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, folks, we're going to take a quick look here at these precious metals one last time. I really think we got a chance here. This is the gold chart. We're basically saying that if we make a complete 61% retracement of this whole move, we could get down to 1180. That would be the lowest that you could possibly stay bullish at, in my opinion. But the time and price is coming in here perfectly if we're similar to what we had in December. The reason why I like this on a long-term basis, if you take a look at this long-term chart, you'll see that the long-term 618 has held. If you compare this move down from 1932 per ounce to where we came down at 1130 per ounce, that was a 39% correction that took 3 years to complete. And if you go back and look at the correction that we had in 2008 to 2009 that took 2 years to complete, that correction was 38%. So we had a 38% correction down to 666. Then we went to 1932. Now we've had a 39% correction to 1170. Folks, given all this stuff that's happened with QET, if we ever went back to the old days where they had people actually thinking about what they're doing and stuff, this gold could easily make new highs and possibly go a great deal higher. We've had a question about the silver, where the buy would be in silver, and I believe I can put this up and you'll be able to see it. We're getting close to the end of the show here, but we'll still be able to see it. It's got some really beautiful patterns forming here. In silver to come in around the $16 per ounce level. So it's about 75 cents from where we are right now. But if you look at the harmonics that are there, it's really a beautiful chart in silver. You've got a perfect ABCD coming down from mid-January or late January. You have the 61% retracement coming off of the low from February. Let's try again, Larry. Right after Thanksgiving, the 27th of November, we rallied well over $4 an ounce, and now we're pulling back to a 61% retracement at that level. Silver broke down a great deal more, of course, as we know. It made an 88% correction of the last move, whereas gold did not even come close to that. So, silver is more of an industrial metal anyway. When you consider jewelry being an industry, that's where you get these figures, I guess. But we also have this time and price of 20 days down. That's due to come in any time now. If we miss it, we'll probably have to buy it on strength, but the market has been coming down very nicely in both gold and silver. It's been just a beautiful market to watch. It's just one more jab down, and that should do it. So we'll have a pretty good idea. This is my last show, folks, for the next couple of weeks. It's time to go see the therapist and take a little time off, a little break for the family. Going to visit my grandson and my daughter and some other old friends of mine that are getting up in the age. You got to visit them while they're still above ground. Anyway, I'll be back hopefully around March the 2nd, bright-eyed and bushy-tailed. Well, I don't know about the bushy-tailed, but maybe the eyes will come back. But that's what we're watching. I just can't be really bullish stocks in here. I know they're going higher, but you've got all these ABCD patterns forming. Just be really careful up in here. We don't have the really powerful advanced decline line that we should have. We don't have the big volume behind it, but that could be the dark pools or some of this trading stuff that they have going on. So you want to keep that in mind for sure. We have a caller from, oh darn, I missed it. Jim, are you there?
Larry, have a good time, but are there any key P dates coming up in the next 2 weeks?
Oh, you got me. I'm at Mark Douglas's house, so I can't really, I don't have anything with me. I wish I did, but the guy to ask is Steve Rhodes. He does a super job with those.
Okay, well, you have a great vacation, and we'll see you in a couple weeks.
Yeah, thanks for calling in. John, are you there? I think we lost John. Anyway, we're looking at April gold is what we're looking at, to be a potential buyer. So keep in mind, and we'll see. So live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.